Hi, this is James Shrug with Westpac London's end of day report for Tuesday the 5th of February. There was a pretty decent bounce in equity markets today. I think there's a sense that the sell-off related to Italian and Spanish political uncertainty yesterday was perhaps a bit overdone. Earnings reports both in the US and Europe and UK were mostly positive. That certainly helped things along, as did the news that the Euroland Services PMI was revised up in January. The revision, by the way, driven entirely by Germany. The French PMI was unrevised. The German PMI, just so you know, is at 55.7. The French one is at 43.6. So, you know, a 12-point gap there, emphasising the competitiveness issues, perhaps, that distinguish those two countries. On the other data, we had a slight slippage in the ISM non-manufacturing survey for the US. That's still the second. It fell to 55.2 from 55.7. That's still the equal second highest reading since the very beginning of last year. So this is another example of a series that tends to do very well around the turn of the year, and that in turn reflects seasonal adjustment distortions that are plaguing a lot of US data at the moment. The IBD TIPP Economic Optimism Index, which is the first read on consumer confidence for February, it was up slightly, 46.5 to 47.3, with personal finances higher, the economic outlook higher, but the assessment of federal policies actually down for the third month running. European retail sales were down 0.8% in December. No real surprise there. We already knew that German retailing was very weak. And the services PMI in the UK rose from 48.9 to 51.5. It dipped below 50, the cut-off level between up and down, just in December last year, and 51.5 is actually its highest reading since September. So a bit of a sign there that the contraction in UK GDP growth in the fourth quarter may not be repeated in the early part of 2013. The British Retail Consortium's survey of same-store sales for January was running a 1.9% annual pace, and that's its highest since the end of 2011. So two decent-ish pieces of UK data to round the day off. Given all that, market movements, it's just coming up to 4 o'clock in London, so we're not quite at the close yet. The FTSE, though, is up 0.6%. The French market up 1%. The Germans are up 0.2%. Spain's managed a 2% gain, and Italy is up 0.4%. And the Dow US lunchtime is, well, not quite lunchtime, is up 0.8% at 13,997. On the commodity markets, gold's down 1/3% at $1,671 an ounce. Copper is unchanged at 377 cents a pound, and oil is up 0.75% at $96.85 a barrel. The Aussie dollar took a bit of a tumble when the RBA put out its statement. The implication, the inference that we drew from the statement was that there's a pretty decent chance that we'll get the March rate cut that we've been looking for. The RBA basically said that low inflation gave scope to cut rates, and that could be a signal that they're inclined to move next month, perhaps after they've seen the next round of investment intentions from the quarterly survey that the Bureau of Statistics will publish shortly. So the Aussie dollar is down about 0.5% from where it was yesterday at 1.037. We've got retail sales coming out today, Wednesday in Australia. Okay, that's it for now. We'll be back tomorrow.